Hey everyone, it's Julie here with TipRanks. Tomorrow, Wednesday, May 28th, Nvidia is set to report their Q1 earnings after hours. So we're going to take a look at what to expect. Let's get into it. All right, guys, welcome back. Thank you all so much for being here. Tomorrow, Nvidia is set to drop their Q1 earnings report after hours, and it's shaping up to be a blockbuster event. As the AI chip king, Nvidia's earnings report could move markets. So, what should you expect? Today, we're going to take a look at how they did in their last quarter, what Nvidia has guided for this quarter, and how Wall Street analysts are weighing in. So, let's dive right in. It is no secret that Nvidia has been on a tear in recent years, gaining over 600% in the last three. And the stock has continued to gain since their fourth quarter earnings report. For their Q4, they saw record-breaking quarterly revenue of $39.3 billion. That was up 78% year over year. Their data center revenue surged to $115.2 billion, more than doubling from the prior year. And they had a successful launch of their Blackwell product, with sales exceeding their expectations at $11 billion in revenue. And earnings per share of 89 cents beat expectations by 4 cents per share. This consistent outperformance, beating estimates in 16 of the last 18 quarters, shows why Nvidia is a Wall Street darling. But with great success comes great expectations. So let's see what they're forecasting for Q1. Nvidia expects Q1 fiscal 2026 revenue to be approximately $43 billion, with GAAP and non-GAAP gross margins projected at 70.6% and 71% respectively. Wall Street's consensus is fairly in line with this. They're anticipating revenue of $43.3 billion approximately. And are anticipating earnings per share of 73 cents, which would be an increase of nearly 20% year over year. However, Nvidia is facing a $5.5 billion impact, and that is due to a charge that they incurred due to U.S. export restrictions on AI chips to China. It is said that their projected gross margin may fall to around 58% due to this inventory write-off related to the ban, and that could impact financial performance. On a more positive note, analysts do expect Blackwell growth to keep scaling. Nvidia's CEO said that demand for Blackwell was incredible, and it's recently been reported that they're planning to launch a new AI chipset for China at a much lower price than its recently restricted H2O model. Taking a look at TipRanks AI analysis, Nvidia does score and outperform. They said it is bolstered by its robust financial performance, evidenced in significant revenue growth and strong profitability. The valuation appears high, reflecting market optimism, but also potential risks of overvaluation. Positive earnings call sentiment and strong guidance further support the stock's attractiveness. And when we look at how revenue has grown by segment under these key performance indicators, we need to see how robust the growth has been. Ahead of this earnings report, plenty of Wall Street analysts have been weighing in and sharing their opinions, including a 5-star analyst from Morgan Stanley. They noted the H2O ban affecting sales to China and said that it led to a substantial inventory write-down, but they believe that companies' management can mitigate this impact by improving supply of other products. They also highlighted the positive comments from major tech companies like Microsoft, Amazon, and Google regarding growth trends, supporting their optimistic outlook. Also weighing in was a 5-star analyst from Stifel. They said that looking forward, Nvidia's strategic partnerships and product ramps are expected to drive incremental revenue, particularly with the Humane deployment potentially contributing up to $1 billion. The stock's current valuation appears attractive given Nvidia's leadership in global AI infrastructure and the anticipated growth in demand for their products. Overall, Wall Street is expecting a modest beat and raise, but anything else could lead to a potential sell-off. There are currently 37 Wall Street analysts with a rating on the Nvidia stock. With 32 buys, 4 holds, and 1 sell, the average price target of 164 implies an upside of 21%. Looking at those recent ratings in this past week, we have all buy ratings, all with double-digit upside, so some pretty bullish outlooks here. So what could go wrong? Well, any weaker than expected guidance could spook investors, as well as any supply chain bottlenecks or delays in Blackwell rollouts. Those are definitely a risk. But on the positive side, if Nvidia provides a solid guidance increase and some good outlook into the Blackwell demand, we could see the stock surge. So let us know your thoughts on how Nvidia is going to do after this quarter. Are they going to crush it again, or are these high expectations going to be too much to top? Always appreciate hearing from you guys, so leave your thoughts in the comments down below. Make sure to check out the Nvidia page over on TipRanks to stay up with the latest results and how Wall Street is weighing in. Of course, these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a great day. I'll see you back here next time.